Welcome back, traders. Day 4 with an S&P 500 red candle. On Friday, we discussed that we had triggered the bearish 80% rule when we cascaded back into this monthly value area. And today, we fulfilled the prophecy of the 80% rule. We did indeed tag the opposite side of this monthly value area at approximately 3826.25, and you can see some dip buyers appeared at that level. Now the trend still looks awful. Our trend model is at a -1, but we are at a key support level. Check out how rough this market is. This was Thursday's Finviz heat map, Friday, and now Monday. Another brutal day, but you can see things are slowly but surely getting a little bit less red with each session. We are still seeing the relative weakness within these mega cap tech stocks. All of our equity indices closed lower on the session. Relative weakness again in the NASDAQ QQQ down 1.64%. And our ARK Innovation ETF, which finished down 3.13%. We noted this morning in our pre-market session that things looked a little bit ambiguous given the weakness that we were seeing in the bond market. Throughout this year, when the bond market is weak and or the dollar is weak, that's really your key signal that the market is not going to have many long side opportunities. It does appear that we remain in these negative seasonal dynamics. I know a lot of investors were really hoping on a prayer for that Santa Claus rally, but with how weak the performance has been this year, we're pretty much getting the exact opposite. The only green group was the regional banks, and the MSOS Cannabis ETF finished down 18.05%. The only trade that we ended up taking today was a long position in these Tesla March 17th call options for $19.40. And this was really, in my opinion, the golden opportunity to get long Tesla. Let's take a look at the chart. You can see here, you put out a poll, and historically Elon has abided by these. We got a resounding yes vote. Now, this thing has been brutalized, right? And we all know the reason for the brutalization. It is because Elon Musk bought out Twitter and he took on those CEO responsibilities. And with that, that has caused a lot of controversy. Potentially the brand name of Tesla is a bit in the dumps. And honestly, it's just caused a lot of fear with the Tesla investor base. It's just led to a lot of selling. So look, ever since the announcement, this thing has been in a clear downtrend. And this is one of my favorite setups to trade. When a stock is in a downtrend for a specific reason, once that happens, you can wait for the news catalyst that could potentially take it out of its downtrend and get long the stock. Tesla did finish down on the session, down 0.24%, but I must say it did actually show some relative strength compared to the equity indices and certainly the NASDAQ. Now, I'm really curious to see what this stock could do if the market actually has a bounce. Now, we know a lot of investors sold their positions due to the Twitter stuff. A lot of investors were shorting the stock due to the Twitter stuff, and now it's at the lowest valuation it's ever been at. So I do like this stock to the long side. With that said, though, this is just such a horrible market, and we know that the trend is down. Our trend model is still at a -1. And what is really treacherous about this landscape is we're in this environment where the S&P 500 is falling, but the volatility is also falling. Down VIX, down SPY. And we had a similar dynamic in the fall when we had that marathon sell-off. And how did that end? Well, it ended with a spike in the VIX. The VIX spiked, the VVIX spiked, and once we got that, we were really in the eye of the storm. And then once those came off their peaks, then the market rebounded. Now the market's come down a lot, but given that we haven't had any sort of VIX spike or any real boost in fear, it is tough to just go ahead and say, you know, the market's been down a couple days in a row, it's gotta move up, right? So that is why I added that Tesla position. If you've been watching these videos, you know last week we took down most of the risk in our portfolio, and this was really just added as a test trade. Now, what I'm going to make sure to do is if I don't get traction on my Tesla trade, I'm not going to continue to add exposure. So we'll see what happens. We are at this key support level for the S&P 500. This is where buyers would logically appear, but we still have a bunch of overhead supply above us, and we do have this VPOC down here at about 3,700. As always, we have to expect the unexpected. Could we end up tagging that VPOC? Absolutely. The NASDAQ also looks pretty weak. We did the same exact thing. We tagged this bottom of the monthly value area. The Russell 2000 has already broken down below value, and we're actually fast approaching this VPOC down here at 1733.9. So it does appear that across all these indices, we are falling into support levels, but that doesn't mean that the support levels are going to hold. So I would much prefer to add some test exposure and then just sit tight. I don't want to like preemptively, try to get out ahead of a market bounce with too much exposure. The Dow Jones also pulling into what could end up being support. So we're going to have to see what happens into the end of the week. Now, here is a really good quote that I want to share with you. Mike Shell shared this, and it's a Jesse Livermore quote. Whenever I have had the patience to wait for the market to arrive at what I call a pivotal point before I started to trade, I have always made money in my operations. This is, again, from Jesse Livermore. And this is super important because most traders and most, goldfish brain investors, they really just want the constant action. They want to be trading all the time. And to be honest, me running a trading community, I certainly feel that extra pressure to be doing a little bit more and trading a little bit more. But I gotta say, in this market environment, until this changes, until the trend model flips, until something changes on monetary policy, price action starts turning around, whatever, there really isn't a ton of reason to be going around slinging risk in your portfolio. I know that's not what everyone wants to hear. Everyone wants to hear like there's just a big opportunity every day and like, oh, the market's going down, let's buy some, let's get into some shorts, and like, oh, it's going back up, let's flip long. And in reality, when you get away from like the social media investing circles, that level of perfection and precision honestly does not exist. In these environments, it's all about survival. So that's really what I'm looking for. I added some Tesla exposure. Hope that does well. I think we have a nice edge on that trade, but we do need some cooperation from the market. With that being said, if you enjoyed this video, make sure to click the like button and also subscribe to the channel. That really supports everything we are doing here. We're actually very close to 600 subscribers on the channel. So if you could get us there, you would be the best. Have a great night, everyone.